The name Cathie Wood is linked to bold actions and success in the world of finance and investing. Her recent acquisition of a sizable number of Tesla shares, her third in as many months, is not an anomaly. This is at a time when Tesla's stock has been experiencing notable ups and downs in the wake of a challenging 2022 that alarmed investors due to Elon Musk's antics on Twitter. Discover why Cathie Wood took advantage of this chance and what it means for Tesla's future in this Wall Street Gains video. We'll also look at how Tesla has affected the conventional auto sector and how they managed to stay one step ahead of the competition. So buckle up, press the like button, and let's get going. The well-known investor Cathie Wood took a risk when she grabbed a sizable chunk of Tesla stock for the third time in a short period of time. Over $11.7 million worth of shares were acquired by her ARK Invest fund from 3 different exchange-traded funds. This occurs at a time when Tesla's stock has been erratic lately, experiencing large ups and downs after a challenging 2022 that alarmed investors with Elon Musk's antics on Twitter. Cathie referred to Musk as Tesla's Renaissance man in an exclusive interview and alluded to the company's competitive advantage. In Wood's future, Tesla's stock price will have risen to a point where ordinary investors can no longer afford it. A Renaissance man is a person who is knowledgeable about a wide range of subjects, including science, philosophy, literature, and the arts. There was a strong emphasis on knowledge and learning throughout a wide range of subjects during Europe's Renaissance period, which spanned from the 14th to the 17th century. During this time, many well-known personalities emerged who typified this philosophy. Elon Musk, on the other hand, is well known for his diverse interests and career highlights in a number of areas. For example, prior to founding Tesla, a business that has completely transformed the electric vehicle market, he co-founded PayPal, a very popular online payment system. He is also the founder of the Boring firm, which is creating subterranean transit systems, and SpaceX, a private space exploration firm. Additionally, Musk has continuously shown that he is a creative thinker who is prepared to take on challenging initiatives. For instance, he has already launched many spacecraft to the Red Planet in an attempt to colonize it. In addition to all of that, he has designed a test track for the Hyperloop, a mode of transportation that would let people to travel at high speeds in pods in low-pressure tubes. All things considered, Musk is a modern-day Renaissance man with a wide range of interests and accomplishments, and his audacious ambitions and creative thinking continue to motivate a large number of people worldwide. For the third time since October, celebrity investor Cathie Wood has taken control of a substantial chunk of Tesla stock after the company's latest decline to its lowest point in more than 2 years. It's important to remember that Tesla's stock had already dropped more than 19% in December and almost 55% for the year when Cathie Wood made her buy. Additionally, ARK has lost over 13% of its value that month and 64% of its value in 2022. Cathie Wood's ARK Invest bought 74,862 shares of the electric vehicle manufacturer across 3 of her exchange-traded funds for an estimated $11.7 million, according to a daily transaction report sent via email. After Zoom and Amazon, Tesla is ARK's third-largest investor in its financial products portfolio. In Cathie's opinion, Tesla represents the greatest substitute for vehicles made by conventional automakers. With its colorful and occasionally erratic entrepreneur, Elon Musk, leading Tesla, has altered the century-old car industry in just 16 years. Due to their size and bureaucratic structure, traditional automakers find it difficult to stay competitive in a world where software is everything. They also take longer to adapt to client requests. These businesses have a distinct culture from software companies and depend on consumer financing to fuel sales growth, in contrast to Tesla, which works with agility and creativity. Rather than being a traditional car maker, Tesla's rate of innovation in the high-end vehicle sector is more akin to tech titans like Google and Amazon. Its remarkable market valuation serves as a warning to other automakers that, in order to stay competitive and relevant in the market, they too must create creative, Tesla-like business models. While acknowledging that other automakers, like VW and BMW, have made notable advancements recently, Cathie said that Tesla still outperforms them in terms of power and range. Tesla has been heavily investing in autonomous driving technologies, which have the potential to revolutionize the auto industry. Tesla has been more nimble and able to move more quickly because of their focus on these areas, even though other automakers are also investing in electric vehicles and autonomous driving. However, as more automakers like Ford, General Motors, and Volkswagen step up their attempts to create electric vehicles, the market for these vehicles is becoming more competitive. By 2025, Ford plans to have invested more than $22 billion in electric and driverless vehicles. The Mustang Mach-E, the company's first all-electric car, was introduced in 2020. Ford has also declared that it will launch an electric variant of its well-liked Explorer SUV, an electric transit car, and an electric F-150 pickup truck. By 2025, GM wants to offer 30 electric cars worldwide, with two-thirds of those being sold in North America. The Chevrolet Bolt, the brand's first all-electric car, was introduced in 2016. Moreover, GM has declared intentions to introduce an electric Cadillac SUV, an electric Hummer pickup truck, and an electric variant of its well-liked Silverado pickup truck. By 2025, Volkswagen wants to sell 1 million electrified cars a year. The ID.3, the company's first all-electric car, was introduced in 2020. Volkswagen has also declared that it will launch an electric ID.4 SUV, an electric microbus, and an electric version of its well-liked Golf hatchback. For many years, Toyota has led the industry in hybrid cars, but it is currently increasing the number of electric vehicles it offers. Toyota has revealed plans to launch 3 electric vehicles: an electric Land Cruiser, an electric Lexus luxury brand, and an electric version of its well-known RAV4 SUV. In 2010, Nissan became one of the first big automakers to introduce the Nissan Leaf, an all-electric automobile. Since then, the business has unveiled a second-generation Leaf with more features and a longer range. Additionally, Nissan has stated that it intends to launch an electric variant of both its luxury brand Infiniti and its well-liked Rogue SUV. Wood asserts that unless automakers want to incur losses on their vehicles, they will not be able to match or compete with Tesla's combination. In today's software-centric environment, Tesla has a big advantage over traditional automakers, and this is mainly responsible for its success. These traditional businesses suffer from being too big, too bureaucratic, too slow to react to consumer needs, too dependent on customer financing to spur sales development, and too different of a culture from a software company. Because of this, the top automakers acknowledge Tesla as a formidable rival. Autonomous taxis are viewed as a major factor contributing to Tesla's prospective new revenue source and future success. The creator and CEO of RK, Cathie Wood, predicts that autonomous taxis will generate over 50% of the company's projected EBITDA and 60% of its predicted value by 2026. In 2026, electric vehicles would generate 57% of the company's revenue, but their margins will be significantly lower than those of the robotaxi. Because ARK is now more confident in Tesla's ability to drive itself, they estimate that the autonomous ride-hailing service will emerge in 2026, 4 years later than Musk originally predicted. An industry that has existed for more than a century has been upended by Tesla's success. Cathie Wood raised some issues over Elon Musk's overuse of Twitter when questioned about his leadership at Tesla. This has alarmed some investors. It is anticipated by investors that Tesla might start providing autonomous ride-hailing services for a fee as early as 2024. The updated model is expected to increase Tesla's capital efficiency even more, with each extra unit of capacity costing between $6,000 and $8,000 by 2025. Compared to the prediction from the previous year, when the company spent about $80,000 to upgrade the Model 3, this is a huge improvement. It is anticipated that Tesla will pay a sum ranging from $2,000 to $7,500 for every extra capacity unit in 2026. Based on the company's latest model updates, ORK's bear and bull case scenarios suggest that Tesla's shares may be valued anywhere from $2,900 and $5,800 in 2026. But if this happens, Tesla stock will become unaffordable for the typical American, as only wealthy investors will be able to purchase it. According to Elon Musk, owners of Tesla cars will be able to include their cars in the ride-sharing network, and the business would charge a commission for each journey. He anticipates the service to launch as early as 2021, though it's unclear if the business will be able to fulfill this aggressive schedule. Some, on the other hand, are more negative and fear that the